Welcome back to Market Minute. In this video, we are going to talk about IEX stock. IEX stock is down by 20% in the last two trading sessions. Let us understand the reason behind it. Before we get started, let's understand the IEX business model. Before that, let us understand the contract of electricity that usually we goes in the Indian market. So there are a lot of long-term contracts which comprises of 90% of overall market, and the short-term contract for the electricity which is of 10%. So they fix the price to buy the electricity at that particular price over the period of time. So which is down the line of 5 years or 10 years, or let's say which is a long-term contract. And the short-term contracts are where they can go and buy it in the current as a spot market price. So let us understand these are the two type of contracts are there, and 90% is of long-term contract and 10% is of short-term contract. So here we have the producers of electricity that can be of Tata Power, our fragmented players, our JP Power, Adani Power, and we have a buyers where we have a state governments, commercial businesses, are some kind of factories. So we have buyers. So in between we have a IEX, which which is a kind of a volume trading, between electricity contracts are traded between this, and they play in the short-term contract market. So in this short-term contract also, they comprises of 89% of the market share. So this is the IEX business model. So they are an exchange where the contracts are at the spot price of the electricity is being found. So right now the shares is fell by 20% in the last two trading sessions. Let us find out the reason behind it. What Ministry of Power said is they directed the Central Electricity Regulatory Commission to implement the process of market coupling. So let us understand what is market coupling, and because of that why the stock or price of IEX is getting impacted. So market coupling is nothing but they are trying to aggregate the they try to get the buy bid and the sell bid from all the power exchanges, and trying to aggregate and match and to find the unique or uniform market price or its market clearing price. So they're trying to find it. Before that, the IEX are the other power exchanges such as Power Exchange India Limited and Hindustan Power Exchange. So these all are the exchanges where the different price discovery used to happen, and their voluntary market, they collect and they come up with the own pricing mechanism. Now it is going to be collated, and the third party will be doing this instead of these pricing exchanges, these power exchanges. So it is considered that IEX is a monopoly because of this price discovering mechanism. But now that economic mode for IEX is gone if this implementation of market coupling is done. So their sustainable competitive advantage will be impacted, and obviously the stock price is quite PE is quite high because it has a monopoly tag with it. So now if this implementation of market coupling is going to happen, then the tag will be gone. Obviously that will impact the IEX to a greater extent. So there are other factors which impacts the IEX stock as well. One is like the spot market price of the short-term contract are very high, as you know there is a huge demand for the electricity and there is a less supply. Then obviously the price of the spot market will be quite high. So usually it happens like they enter into a long-term contract. So obviously when the this IEX in the short-term contract market, and this impacts the share price of IEX. So this is another reason it has been found, and there is a rising competition as well, where some other exchange is getting added, and because of that, IEX market share is getting shrinked. So these all the other impact is happening for IEX as well. So the key takeaway from this analysis is we need to understand the true meaning of monopoly. Monopoly stocks are often, if you see, these monopoly stocks are often either highly regulated by the government indirectly, or the changes in the ruling government have a greater impact on the share price. So we should understand, is it true monopoly or not, by analyzing these two, keeping those in mind. So irrespective of whether IEX falls more, it is best to avoid it because its present PE is fairly high and its financial metrics or the valuation is not favorable. Thanks for watching till the end, and if you like the video, do like and subscribe to our channel. Thank you.